Take away the aggregate number, look for dispersion. Mohamed, that raises an important question for capital allocation then. If growth differentials are the story, what's the best way to play it? Through foreign exchange or through something else?
So it's basically through betting on focusing less on the liquidity factor, which has been really high up, and making sure that your credit-based decisions are well anchored, because you are going to go through rougher water wherever you invest. There's going to be contagion on the way up, contagion on the way down. We're going to have overshoots. I can't stress enough, we're going to have overshoots. And those are going to be really good investment positioning opportunities.
When you say overshoots, Mohamed, are you looking for some kind of inflation-induced volatility through the next several months? Because a question I've been thinking about increasingly is, OK, we all assume the same thing. Data's going to rip through the next several months, exacerbated, fueled by the base effects. I'm trying to understand how people react to it in the next several months when they actually see the data themselves, and how you should respond to it too.
So it matters where we've come from, and the answer is yes, that is a really critical issue. We've come from a year in which you've made money, whether you've been in stocks, bonds. Okay, you've made money. Why? Because it was one issue, liquidity. That is less strong. So now it is a completely different mindset to go through. And what we're going to find is we have to deal with some of the excesses of the past. We can't just assume that they don't matter, because they are reflected in people's portfolios. So when we see major changes, you're going to have certain positions that have had too much liquidity to them. And we've seen it. Look at the underperformance of the NASDAQ so far this year.